Rob Blandford was appointed President and CIO of Spider Management Company in July of 2012. Spider, one of the asset management industry's premier outsourced CIO firms, has more than $3.6 billion in assets. Blandford oversees all aspects of the firm's portfolio, including asset allocation, manager selection, and team development.
You know, I'm very constructive on hedge funds over the next 5 years. It'd be unprecedented that the next 5 years play out exactly like the last 5 years, where we have a straight-up bull market with very little volatility. We haven't had a 10% correction in the U.S. equity market since 2009. That's historically unprecedented to go that long. So I think hedge funds are well positioned for the next 5 years. I have seen the relationship between investors and hedge fund managers change really since 2008. I think the pendulum can swing too far in the power between investors and hedge fund managers in the investors' favor, especially with the larger sovereign wealth funds, pension funds coming into the space. That worries me as an endowment investor, that they are overly influential on the hedge fund manager and take up a lot of his capacity and access and negotiate terms that may not be favorable to me as an investor. I think size is an enemy of returns in many cases in many of the hedge fund strategies. So it worries me that returns could be lower as hedge funds grow larger and larger. So we concentrate on the smaller hedge funds. We've been actually reducing the number of hedge funds we invest in, not the allocation, but concentrating in the smaller managers where we have more control and more say in the process. We prefer funds that have a 2 to 3 year track record. Startup hedge funds, I think, have a lot of risk, business risk to them, where the manager has been an analyst at a hedge fund in many cases, but has never run his own fund or run a business. So we like to get the business risk side behind them. So 2 to 3 years is kind of our sweet spot.